Hey everyone, welcome back to the channel. It's Crypto Boy here. If you've ever lost money in crypto, don't worry, you're not alone. Today I'll show you the top reasons people lose money in crypto and more importantly, how you can avoid them. By the end of this video, you'll know how to protect your investments, reduce risk, and grow your portfolio safely. Whether you're new to crypto or have been around for a while, these tips will help you navigate the market with more confidence. Let's jump right in and make sure your crypto journey is a profitable one. One of the most common ways people lose money in crypto is by buying without a plan. It's easy to get caught up in the excitement when you see prices rising quickly. This is called FOMO, fear of missing out, but making decisions based on emotion rather than strategy can be dangerous. Without a clear plan, you're just guessing and hopping for the best. Instead, set your entry point, target profit, and stop loss before you buy. Using a DCA or dollar cost averaging strategy can also help lower your risk and smooth out the volatility. FOMO or fear of missing out is a powerful force in the crypto market. When you see others making quick gains, it's tempting to jump in without thinking. But acting on FOMO often leads to buying at the top and selling at a loss. The best way to avoid this is to stick to your plan and not let emotions drive your decisions. Remember, the market will always have opportunities, so patience and discipline are key. Having a strategy before you buy is crucial. Decide on your entry point, the price at which you'll buy. Set a target profit so you know when to take gains and a stop loss to limit your losses if things go south. This approach takes the guesswork out of trading and helps you stay calm during market swings. A well-defined plan is your best defense against impulsive decisions. Dollar cost averaging or DCA is a smart way to invest in crypto. Instead of putting all your money in at once, you invest a fixed amount at regular intervals. This helps you avoid buying at the top and reduces the impact of market volatility. Over time, DCA can help you build your portfolio steadily and with less stress. It's a great strategy for both beginners and experienced investors. Another major reason people lose money in crypto isn't the market itself, it's security. Hacks, scams, and phishing attacks are everywhere. Many investors lose their funds simply because they didn't take security seriously. Protecting your assets should always be your top priority. Don't let your hard-earned money slip away due to avoidable mistakes. Keep your crypto safe, use hardware wallets instead of leaving your coins on exchanges. Enable two-factor authentication 2FA on all your accounts. Be cautious of fake links and phishing scams, always double-check URLs and never share your private keys. Treat your private keys like your life depends on them because in the crypto world they really do. Hardware wallets are physical devices that store your crypto offline. This makes them much safer than keeping your coins on an exchange, which can be hacked. With a hardware wallet, you control your private keys and only you can access your funds. It's one of the best ways to protect your investments from online threats. Crypto scams come in many forms: fake websites, phishing emails, and even impersonators on social media. Always double-check the source before clicking any links or entering your information. If something sounds too good to be true, it probably is. Stay vigilant and protect your assets by being cautious online. It's easy to get swept up in the hype when a new meme coin or project is trending, but buying in late just because everyone else is often leads to big losses. Prices can crash quickly, leaving you with heavy losses. Instead of following the crowd, take the time to do your own research before investing in any project. Before investing in any crypto, always do your own research. Look into the team behind the project, the tokenomics, use case, roadmap, and the community. Reliable projects have transparent teams, clear goals, and active communities. Don't just trust hype or influencers, make informed decisions based on facts. When you come across a new crypto project, take a closer look. Who is on the team? What problem does the project solve? Is there a real use case or is it just hype? Check the project's roadmap to see if they have a clear plan for the future. A strong community is also a good sign of a healthy project. Meme coins can be fun and sometimes profitable, but they're also risky. Many people buy in late after the price has already pumped and end up losing money when it crashes. If you're interested in meme coins, make sure you understand the risks and never invest more than you can afford to lose. Common mistake is not taking profits when you're ahead. Many people hold on, hopping for even bigger gains only to watch their profits disappear when the market turns. Remember, you never go broke taking profits. It's important to have a plan for when to sell and to stick to it. One smart approach is to take profits gradually. For example, you might sell 25% of your position when you're up 50%. This way, you lock in gains while still having some skin in the game. Taking profits in stages helps you avoid the regret of selling too early or too late. It's a classic saying in trading: you never go broke taking profits. While it's tempting to hold out for even bigger gains, remember that markets can turn quickly. By taking profits along the way, you ensure that you're actually making money, not just watching numbers on a screen. Leverage trading can be exciting, but it's also one of the fastest ways to lose money in crypto. With leverage, you're borrowing money to increase your position size, which means both gains and losses are amplified. For beginners, it's best to avoid leverage altogether and focus on spot trading. Leverage can turn small price movements into big wins or devastating losses. Many traders get liquidated, meaning they lose their entire position because they used too much leverage. If you're new to crypto, stick to spot trading where you buy and hold actual coins, not contracts. Spot trading means buying and holding actual crypto assets, while futures trading involves contracts that bet on price movements. Futures can be risky, especially with leverage. Beginners should focus on spot trading to avoid unnecessary risk and learn the basics before considering more advanced strategies. Crypto trading is as much about psychology as it is about charts and numbers. Emotional trading, acting out of fear, greed, or panic, often leads to poor decisions and losses. Staying calm and disciplined is essential for long-term success in the market. In crypto, psychology plays a huge role. The market is volatile and it's easy to get swept up in the excitement or fear. Having a written plan and sticking to it helps you stay focused and avoid making impulsive trades. Discipline is your best friend when it comes to investing. Emotional trading is when you let feelings like fear or greed dictate your decisions. This often leads to buying high and selling low. To avoid this, create a plan before you enter a trade and stick to it, no matter what the market does. This approach will help you make rational decisions and protect your capital. Many investors focus too much on short-term price movements and forget about the bigger picture. Crypto markets move in cycles, and understanding these cycles can help you make better decisions. Don't get caught up in daily price swings, look at the long-term trends. Crypto markets go through cycles of boom and bust. Learning about these cycles as well as macro trends and regulations can give you an edge. By understanding the bigger picture, you can avoid panic selling and make more informed decisions about when to buy or sell. Macro trends are the big picture forces that shape the crypto market, like global adoption, regulation changes, and technological advances. Keeping an eye on these trends helps you anticipate market shifts and position your portfolio for long-term growth. The crypto world is always evolving. New technologies, coins, and trends emerge almost daily. To stay ahead, you need to keep learning. Follow trusted channels, read up on the latest news, and never stop expanding your knowledge. With so much happening in crypto, it's important to stay updated. Subscribe to reputable news sources, join online communities, and participate in discussions. The more you know, the better equipped you'll be to make smart decisions and avoid costly mistakes. Everyone makes mistakes in crypto, especially when starting out. The key is to learn from them and not repeat them. Analyze what went wrong, adjust your strategy, and keep moving forward. Every mistake is a lesson that can make you a better investor. Crypto is a fast-moving industry. What worked last year might not work today. Be open to adapting your strategies as the market evolves. Continuous learning and flexibility are essential for long-term success in crypto investing. With so much information out there, it's important to rely on trusted resources. Look for reputable channels, blogs, and experts who have a track record of providing accurate and unbiased information. Avoid sources that promise guaranteed profits or seem too good to be true. Let's quickly recap the top mistakes people make in crypto. Buying without a plan, ignoring security, following hype instead of research, not taking profits, using too much leverage, not controlling emotions, and ignoring the bigger picture. Each of these can lead to losses, but with the right approach, you can avoid them. Protecting your investments is about more than just picking the right coins. It's about managing risk, staying informed, and making decisions based on logic rather than emotion. By following the tips in this video, you can build a safer and more profitable crypto portfolio. Reducing risk is key to long-term success in crypto. Use stop-loss orders, diversify your portfolio, and never invest more than you can afford to lose. These simple steps can help you avoid major losses and keep your investments safe. Growing your portfolio doesn't mean taking huge risks. Focus on steady, consistent gains over time. Reinvest profits, stay patient, and avoid chasing quick wins. Safe growth is sustainable growth, and it's the best way to build wealth in crypto. Patience is one of the most valuable traits for any investor. The crypto market can be volatile, but those who stay patient and stick to their plan are often rewarded in the long run. Don't rush decisions, let your strategy work for you. Overtrading is when you make too many trades, often in response to short-term price movements. This can lead to higher fees and more mistakes. Instead, focus on quality trades based on your research and strategy. Less is often more when it comes to trading. Keeping track of your trades and performance is essential. Use a journal or spreadsheet to record your buys, sells, and the reasons behind each trade. Reviewing your performance helps you identify what works and what doesn't, so you can improve over time. There's a lot to learn from other investors' experiences. Join online communities, read case studies, and listen to interviews with successful traders. Learning from others' mistakes and successes can help you avoid pitfalls and find new strategies. Online safety is crucial in crypto. Use strong, unique passwords for each account, enable 2FA, and be cautious about sharing information. Regularly update your software and wallets to protect against new threats. A little caution goes a long way in keeping your assets secure. Phishing attacks are common in crypto. Always double-check email addresses and website URLs before entering your information. Never click on suspicious links and use bookmarks for important sites. Staying alert can save you from losing your funds to scammers. Regularly reviewing your strategy helps you stay on track. Markets change, and so should your approach. Set aside time each month to assess your performance, update your plan, and make adjustments as needed. This habit will keep you sharp and prepared for whatever the market throws your way. Good habits are the foundation of successful investing. Stick to your plan, keep learning, and don't let emotions take over. Over time, these habits will help you avoid costly mistakes and grow your wealth steadily. A long-term mindset is essential for success in crypto. Don't get discouraged by short-term losses or distracted by quick gains. Focus on your goals and let your investments grow over time. Remember, it's not about how fast you make money but how long you can keep it. Staying smart and safe in crypto means being proactive, not reactive. Take the time to learn, plan, and protect your investments. By following these principles, you'll be well on your way to building a successful and secure crypto portfolio. Those are the top ways people lose money in crypto and how you can avoid them. If you found this helpful, remember to stay smart and safe in your crypto journey. It's not about how fast you make money but how long you can keep it. Keep learning, stay disciplined, and protect your investments. Thanks for watching, and see you in the next video.